Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. Okay. All right. Okay, so we have the circle here. Now in this circle, we want to have all right. Then we have one, we have two, all right. So this here is what is just like a clock. Now, when the market is on a 1 o'clock direction, then you know it's a very strong trend. It's a very, very strong trend. There are times when you see a certain candlestick that will just move, like for instance, the boom and crash. That's you see spikes, right? Long spikes. That's not even what I'm talking about. I'm talking about when you see on a higher time frame, or maybe on a 4 hour time frame, you see a candlestick being so long. The next candlestick you see following it long, all of them just keep going straight bullish straight away. And we're talking about a 1 o'clock direction. The market is strongly bullish. This is a typical example of a 1 o'clock direction. So this is an example of a 2 o'clock direction. I mean to say a 1 o'clock direction is, let me see if I can find a 1 o'clock. 1 o'clock direction is usually rare. Okay, between here to here is a 1 o'clock direction. It's usually rare sometimes. All right. So we mainly see the 2 o'clock direction, right? And then another one you can see sometimes is a 3 o'clock direction, which is like this. Right, you would notice that the movement, the liquidity in this move here is stronger than the liquidity in this move. Two of them are still bullish trends, but you can't compare them. You can see that here we have quite a lot of green. Here we have quite some red in between, and the market is not straightly going up. When you see this kind of a trend, it tells you that anything can happen. It can go bearish anytime. But this one tells you that, man, the bulls are still in full power. That's why if you observe, you will see how the move with full force and even broke beyond here. It's when they break it that they now decide, okay, let's go and retest. When the market is moving in full force, you can easily tell if it's going to break that resistance it's going to touch. But a market that is going like this, you can also easily tell if it's going to respect the resistance that is about to go and touch. So you use the strength of the trend to know what price might likely do. I hope I'm communicating. You use the strength of the trend to know what price might likely do. So with this, you can see how market moves speedily, broke through it without even checking, looking left or right. Broke through it is when it has broken through it. It now decided, okay, let's go and retest because that's what it's about to do. It wants to retest, and probably after retesting, there is every tendency that it can start moving again with full force. But it depends on whatever happens because right now, as you can see, is currently on another resistance level. So there are certain things you must be watching out in the market. There are times when you be like, okay, it ought to have respected, sorry, it ought to have respected this level and fall. Why didn't it fall? Look, it was actually looking for this other one. You see this other resistance is what it was actually looking for. So how will you know as a trader who gets into the market? How will you know that is going to respect this one or is going to respect this? How would you know which one is going to respect? You can use the strength of the trend to know if it's likely going to respect this guy or this guy. When you see it moving with this kind of a full force on a 1 o'clock or I call it a 2 o'clock direction strength movement, you should know that man, there's a tendency that this guy closer, it might break it. I guess this is where it's heading to. But if this trend that moved here right now, if it was moving in this direction, in this 3 o'clock direction, all right, there's tendency that it should have respected this guy because for it to be moving in this direction means that the bears are in the market. And what the bears are only looking for is who would support us. Where is the resistance that's going to support us? And once they find a resistance that is going to support them, boom, they will sell. At least, even if it's not going to go deep down, it's going to go a bit, huh? Maybe when it gets here where we have this previous resistance before, then it might respect and go back up again for it to come down. This is exactly what happens in the market. So understanding the strength of the market is really important. It's not just about getting into the chart and check the trend and you want to buy or sell. No. First of all, check the trend you're seeing. How strong is that trend? Very crucial. Then the next thing we have is what? Where's the clock again? The next thing we have is what? The 5 o'clock direction. So this is for a bearish market. We have the 5 o'clock and the 6 o'clock. This the 6 o'clock is for a very strong bearish market, and the 5 o'clock is for a shallow, strong bearish market. Okay, so let's see if we can find an example of a 6 o'clock and a 5 o'clock directional bearish market. I call this a 5 o'clock direction because its slant is not so it's not as sharp as the 6 o'clock. I call this a 6 o'clock direction. Okay, so the whole idea of this clock thing is just to give you a scenario to understand the strength of your markets. So looking at it from a 4 hour full-time view like this right now, looking at this guy like this from here to here as a bullish trend, I can tell you that this trend is not so strong and anything can happen. It can fall anytime. You get it can fall anytime. It's not a strong bullish trend right now. I need to see it moving with full force this way before I know yes, it's bullish and strong. So understanding that is very crucial. So now let us use this VIX 25 as a typical example for our practice tonight. Okay, I got into the charts. Yes. First thing I want to check is what? My trend. Is bullish. Cool. What next? I want to check out how strong is the bullish market. Okay, so using my eyes to look at it. Also, you can also check out from this slanting like this. It can also get you confused sometimes. Okay, yeah. Remember, we are on a 4 hour time frame, so this is it, an entire view of this is December. As you can see, this is December 2020, 2022. So it's a very long time, and this is the future. Okay, so you might likely want to overlook a few things happening all the way far away from now and focus more on the future here. So let's go straight to the future. So right now in the future, we can see that if we had looked at it, if we were looking at it from December 2022, it's a bullish market. But right now, in this current future here, is currently a bearish market. Okay, it's currently a what? Bearish market.
Mr. Tin,
Yeah.
hello. Start this up. To how we find the trend line, we start from the lowest point to which point? Because I'm kind of confused when to draw trend lines.
Okay, I will talk about that. I'll talk about that. Okay.
Okay.
Yeah. So looking at it from here right now, we can see that between here to here is actually what? A bearish market. So now the question is, should I sell? We're still going to see the reasons why we should sell or buy as we are making our analysis. Now, when you want to set up your trend line, actually, the trend line is also another training of its own. Okay, is a strategy of its own. But how to draw your trend lines? When you want to draw a trend line, there is something they always say when you see a bullish market. Okay, you want to draw your trend line from beneath upward. Okay, and then you want to make sure it has at least two touches. By the time I start teaching us the trendline strategy, I'm going to teach you guys something new and something strange in a trendline strategy. But for now, we're talking about this here, how to draw your trend line. Okay, you want to make sure you have at least two touches. This is one touch, this is a second touch, and then drag it to the future. Okay, and then as you drag it to the future, you want to see how price will react anytime it comes back to that trend line. All right. So let's say, for instance, viewing from here to here, we can see that we have how many touches so far? I think I need to put this here. Okay. We have one touch here, we have a second touch here, and then we have a third touch here. Okay. We have a third touch here. So anything can happen in the nearest future. There could be another touch and a reaction again. That's what makes it a trend line. Okay, you're actually checking out the support and resistance in a slanting manner. Okay, support and resistance of the market in a what? Slanting manner. That's what you're checking out for this market. Okay, so how to draw your trend line? Again, I'll repeat it again. You want to make sure you have at least two touches. So now, for instance, for you to have an effective trend line, here we have one touch, two touch, and a third touch. There's tendency that on the fourth time it could break. So what I always advise you to do is take it out of this first touch, put it here, and let this one be your first touch. Then make this one a second touch. Okay. When you make it a second touch, then you want to observe what will market do in the future when it gets to your line again. Okay, you want to observe. And if you want to draw your trend line, don't use the body of the candle. You always want to make sure you allow it, you use the wick of the candle. Check out if it has any wick and make sure you use the wick of the candle. Okay, don't neglect the wick. This is another mistake a lot of traders make in the market. They neglect the wick of a candlestick, and they just take it like, it should be on the body now. Don't neglect the wick. For a wick to be printed on the chart means that that price got there in the past, and there's everything is that price want to get there again in the nearest future. So don't neglect what the wick of a candle.